Hey everyone, welcome back to the channel. It's Crypto Boy here. Today we're diving into the world of crypto investing, whether you're just starting out or already have some experience under your belt. This video is designed to help you understand the key differences between beginner and advanced crypto investors. By the end, you'll have a clear idea of what separates a beginner's mindset from an advanced investor strategy, and you'll pick up actionable tips to level up your own crypto game. Let's jump right in and start your journey to smarter investing. First big difference between beginners and advanced crypto investors is all about mindset. Beginners often focus on making money quickly, chasing the next big thing and hopping for fast gains. Advanced investors, on the other hand, are more concerned with protecting their capital and growing it steadily over time. They understand that patience and discipline are key. Here's a pro tip: the longer your time horizon, the better your decisions will be. Don't let short-term emotions drive your choices. Remember, trading long-term success for short-term excitement rarely pays off. When it comes to research, beginners often invest just because someone told them a coin will skyrocket. Advanced investors take a very different approach. They do their own research, known as DYOR. This means studying white papers, understanding tokenomics, checking project roadmaps, and looking into partnerships. If you don't understand how a project works or how it makes money, it's best to stay away. Pro tip: never invest in something you don't fully understand. Knowledge is your best defense in the fast-moving world of crypto. Investment strategy is another area where beginners and advanced investors differ. Beginners tend to buy impulsively, often driven by hype or fear of missing out. Advanced investors, however, always follow a plan. They use strategies like dollar cost averaging (DCA) and diversification to manage risk. A typical advanced portfolio might split 50% into Bitcoin, 30% in strong altcoins, and 20% into high-risk small caps. Having a plan keeps emotions in check and helps you stay on track, no matter what the market is doing. Emotions can make or break your crypto journey. Beginners often panic sell when prices drop or buy in late when prices are already high. Advanced investors, on the other hand, stay calm and disciplined. They set rules for themselves and stick to them, no matter how the market moves. Automating your investments and setting limits before you enter a trade can help take emotions out of the equation. Remember, discipline is what separates winners from losers in the long run. Tools you use can make a huge difference. Beginners often rely on influencers and social media for tips. Advanced investors use data-driven tools like TradingView, CoinMarketCap, Glassnode, and DeFi Llama to analyze the market. Learning basic technical analysis, like support, resistance, RSI, and moving averages, gives you an edge. These tools help you make informed decisions instead of just following the crowd. The more you understand the data, the better your investment choices will be. Risk management is a key skill for advanced investors. While beginners often focus only on potential profits, advanced investors are always thinking about risk. They use stop losses to limit potential losses, size their positions carefully, and always prioritize protecting their capital. Here's a pro tip: never risk more than you can afford to lose. By managing risk, you ensure that you can stay in the game long enough to see real growth. Understanding market cycles is crucial. Beginners often believe the market only goes up, which can lead to disappointment during downturns. Advanced investors know that crypto moves in cycles: bull markets, bear markets, and periods of accumulation. They study events like Bitcoin halving and pay attention to macro trends to spot the best entry and exit points. Recognizing these cycles helps you avoid buying high and selling low, and positions you for long-term success. Advanced investors don't just hold their crypto, they make it work for them. They use strategies like staking, yield farming, liquidity pools, airdrops, and DeFi to generate passive income. But it's important to always know where your yield is coming from. If you don't understand the source, you might be the yield for someone else. Take the time to research each opportunity and only participate in what you fully understand. Well, that's the main difference between beginners and advanced crypto investors. It's not about trying to time the market perfectly, but about spending time in the market, learning and growing. Stay disciplined, stay informed, and always keep improving your strategy. The more you learn, the more confident and successful you'll become as a crypto investor. Thanks for watching, and keep leveling up your crypto game. Let's take a closer look at the beginner mindset. Many newcomers to crypto are drawn in by stories of overnight millionaires and quick profits. This leads to a focus on short-term gains and a tendency to jump from one hot coin to another. Unfortunately, this approach often results in losses as emotional decisions replace careful planning. The key takeaway: don't let hype dictate your moves. Instead, start building a foundation of knowledge and patience. Advanced investors approach crypto with a different attitude. They see the market as a marathon, not a sprint. Their focus is on steady, sustainable growth and capital preservation. They know that setbacks are part of the journey, and they don't let fear or greed drive their decisions. By keeping emotions in check and thinking long-term, advanced investors set themselves up for lasting success. Doing your own research, or DYOR, is a cornerstone of advanced investing. Beginners often rely on tips from friends or social media, but this can be risky. Advanced investors dig deep into the details, reading white papers, analyzing tokenomics, and evaluating project teams. This research helps them avoid scams and poor investments. Remember, knowledge is power, and the more you know, the better your results will be. Tokenomics refers to the economic model behind a cryptocurrency. Advanced investors study how tokens are distributed, what gives them value, and how the project plans to grow. Beginners might overlook these details, but understanding tokenomics can reveal whether a project is built to last or just a short-term hype. Always take the time to understand the fundamentals before investing. Project's roadmap outlines its future plans and milestones. Advanced investors use roadmaps to gauge a project's potential and track its progress. If a project consistently meets its goals, it's a good sign. Beginners might ignore roadmaps, but they're a valuable tool for assessing credibility and growth potential. Always check if a project is delivering on its promises. Strength of a project's team and its partnerships can make or break its success. Advanced investors look for experienced teams and reputable partners. Beginners might overlook this, but strong leadership and solid alliances are often signs of a project's long-term viability. Do your homework on who's behind the project and who they're working with. Impulse buying is a common pitfall for beginners. The fear of missing out or FOMO can lead to rushed decisions and poor outcomes. Advanced investors avoid this by sticking to their strategy and not letting emotions dictate their actions. If you find yourself wanting to buy just because everyone else is, take a step back and review your plan. Dollar cost averaging, or DCA, is a strategy where you invest a fixed amount at regular intervals, regardless of price. This helps reduce the impact of volatility and removes emotion from the process. Advanced investors often use DCA to build their positions over time, while beginners might try to time the market and end up buying high. Consistency is key to long-term success. Diversification means spreading your investments across different assets to reduce risk. Advanced investors rarely put all their eggs in one basket. By holding a mix of Bitcoin, strong altcoins, and some high-risk small caps, they balance potential rewards with safety. Beginners often go all in on a single coin, which can be risky if things go south. Diversification is your safety net in the unpredictable world of crypto. Well-structured portfolio is essential for advanced investors. They often allocate 50% to Bitcoin, 30% to strong altcoins, and 20% to high-risk small caps. This mix provides stability, growth potential, and a chance for big gains. Beginners might not think about allocation, but having a clear plan helps you weather market ups and downs. Discipline is what keeps advanced investors on track. They set rules for themselves and follow them, even when emotions run high. Beginners might abandon their plan at the first sign of trouble, but discipline helps you stick to your strategy and avoid costly mistakes. Automation can help by taking some decisions out of your hands and keeping you consistent. Automating your investments can help you stay disciplined. By setting up recurring buys or automatic trades, you remove the temptation to react emotionally to market swings. Advanced investors use automation to stick to their strategy, while beginners might get caught up in the moment. Automation is a powerful tool for building wealth over time. Setting limits before you enter a trade is a smart move. Advanced investors decide in advance how much they're willing to risk and where they'll take profits. This helps prevent emotional decisions and keeps you focused on your long-term goals. Beginners often skip this step, which can lead to bigger losses. Always know your limits before you start. It's easy to get caught up in what influencers are saying, but advanced investors rely on data, not hype. They use platforms like TradingView, CoinMarketCap, and Glassnode to analyze trends and make informed decisions. Beginners might follow the crowd, but data-driven analysis leads to better outcomes. Trust the numbers, not just opinions. Technical analysis is a valuable skill for advanced investors. Learning about support and resistance levels, RSI, and moving averages can help you spot trends and make smarter trades. Beginners might find these concepts intimidating, but even a basic understanding can give you an edge. Start with the basics and build your knowledge over time. Support and resistance are key concepts in technical analysis. Support is a price level where buying tends to happen, while resistance is where selling increases. Advanced investors use these levels to plan their trades and set targets. Beginners might ignore them and end up buying or selling at the wrong time. Learning to spot these levels can improve your results. RSI, or Relative Strength Index, and moving averages are tools that help you understand market momentum. Advanced investors use them to identify overbought or oversold conditions and to spot trends. Beginners might overlook these indicators, but they're powerful for timing entries and exits. Take the time to learn how they work and add them to your toolkit. Advanced investors always think about risk before profit. They know that protecting their capital is the foundation of long-term success. Beginners might focus only on potential gains, but ignoring risk can lead to big losses. Always use stop losses, size your positions carefully, and never risk more than you can afford to lose. Position sizing means deciding how much to invest in each trade. Advanced investors calculate their position size based on their risk tolerance and the size of their portfolio. Beginners might go all in or invest randomly, which can be dangerous. Proper position sizing helps you manage risk and avoid devastating losses. Stop loss is an order that automatically sells your asset if the price drops to a certain level. Advanced investors use stop losses to limit their losses and protect their capital. Beginners might skip this step, hoping prices will recover, but this can lead to bigger losses. Always set a stop loss before entering a trade. Crypto markets move in cycles: bull markets, bear markets, and periods of accumulation. Advanced investors study these cycles to make better decisions. Beginners might think the market only goes up, but understanding cycles helps you avoid buying at the top and selling at the bottom. Pay attention to market trends and learn to recognize the signs of each phase. Bitcoin halving is a major event that reduces the reward for mining new blocks, effectively cutting the supply of new Bitcoin in half. Advanced investors study these events because they often lead to significant price movements. Beginners might not understand the impact, but knowing about halvings can help you spot potential opportunities and risks. Macro trends like global economic shifts and regulatory changes can have a big impact on crypto markets. Advanced investors keep an eye on these trends to anticipate market movements. Beginners might focus only on individual coins, but understanding the bigger picture helps you make smarter decisions and avoid surprises. Knowing when to enter and exit the market is crucial. Advanced investors use their knowledge of cycles, technical analysis, and macro trends to time their trades. Beginners might buy or sell based on emotion, but having a plan for entries and exits can make a big difference in your results. Passive income is money you earn without actively trading. Advanced investors use methods like staking, yield farming, and liquidity pools to generate extra returns. Beginners might not know about these options, but learning how to earn passive income can boost your overall results and help you grow your portfolio faster. Staking involves locking up your crypto to support a network and earn rewards. Advanced investors use staking to generate passive income and participate in network security. Beginners might not understand how it works, but staking can be a low-effort way to grow your holdings over time. Yield farming is a more advanced strategy where you provide liquidity to decentralized finance, DeFi protocols in exchange for rewards. It can be profitable but also carries risks, so it's important to understand how it works before jumping in. Advanced investors research different protocols and manage their risk carefully. Liquidity pools are collections of funds locked in a smart contract to facilitate trading on decentralized exchanges. Advanced investors use liquidity pools to earn fees and rewards. Beginners might not be familiar with this concept, but it's a key part of the DeFi ecosystem and a way to earn passive income. Airdrops are free distributions of tokens to holders of a particular cryptocurrency. Advanced investors keep an eye out for airdrop opportunities as a way to earn extra tokens. Beginners might miss out if they're not paying attention. Always stay informed about upcoming airdrops and how to qualify. Decentralized finance, or DeFi, offers a range of opportunities for advanced investors. From lending and borrowing to trading and earning interest, DeFi is changing the way we interact with money. Beginners might find it overwhelming, but exploring DeFi can open up new ways to grow your crypto portfolio. It's important to always know where your yield is coming from. If you don't understand the source of your returns, you could be taking on more risk than you realize. Advanced investors dig into the details and only participate in opportunities they fully understand. Don't be the yield for someone else, do your homework. Crypto is a fast-moving space and continuous learning is essential. Advanced investors stay up to date with new trends, technologies, and regulations. Beginners might stop learning after their first investment, but ongoing education is key to long-term success. Make it a habit to read, watch, and learn every week. Being part of the crypto community can help you learn and grow. Advanced investors join forums, attend events, and connect with others to share knowledge and insights. Beginners might go it alone, but engaging with the community can provide valuable support and information. Discipline is the foundation of successful investing. Advanced investors stick to their strategy even when the market is volatile. Beginners might get shaken out by price swings, but discipline helps you stay focused on your long-term goals. Remember, it's not about timing the market, but about time in the market. Wrap up: the journey from beginner to advanced crypto investor is all about mindset, strategy, and continuous learning. Focus on protecting your capital, doing your own research, and staying disciplined. The crypto world is full of opportunities, but also risks. Stay informed, keep learning, and you'll be well on your way to becoming a successful investor. Thanks for watching, and remember to stay crypto smart.